We had a very good experience working with a mortgage broker, which just made us much more confident in our whole process of hunting for a house. So in this video, I thought that I'd share with you how it was like working with a mortgage broker. Hi guys, in case you're new here, this video is part of a series where I and my husband, as first-time homebuyers, buy our first starter home here in the city of Toronto, the GTA to be exact, looking for a condo, an apartment, a townhouse at a price of under $500,000. I know, crazy, right? In the past few weeks, I posted some videos about my whole house hunting process, including viewing some condos and even putting an offer on a condo. And if you want to know more about that, you can check out this playlist, which I will link above here. Long story short, our offer on that condo was not successful. So one mistake that we did, or perhaps not mistake, but a step that we missed, was that at the time of making the offer, we did not really have all our ducks in a row. Although we already had the money saved up for a down payment, we had the money scattered in a few accounts and some of that overseas. And also we were still in the process of getting the best mortgage deal. So after some research, we found out that it was a really good idea to work with a mortgage broker. And I'll also explain to you later why that is. Okay guys, before I continue, just a very important disclaimer up front. As you know guys, I am not a financial advisor, I'm not a real estate agent, a realtor. So all that I'm talking about in this video is based on my own experience and knowledge that I got off of the web. And my purpose here is just to share my experience with you in the hopes that it can kind of manage your expectations about the whole process. So treat this video as kind of a primer so you know what to expect. But if you're serious about starting this whole house hunting process, I would highly recommend you to get in touch with an experienced real estate agent and also a mortgage broker. So now let's continue. In case you are also in the process of buying a house here in Canada, it's really a good idea to start the mortgage pre-approval process as soon as possible. To start off, if you're not familiar with the whole mortgage application process here in Canada, here are some of the ways that you can get a mortgage. Number one is to get a mortgage from one of the big banks, for example, Scotiabank, BMO, RBC, and so on. Well, some of them have good deals. Big banks do not always have the best rates and also not the best terms. One of the reasons is because banks are huge, they have a huge overhead, their management is complicated, and because of all of those things, everything just costs more. Option number two that you have is to apply for a mortgage through what's called a monoline lender or a mortgage lender. A mortgage lender is a lender that specializes in providing mortgages. So usually they won't have a ton of other financial products like savings account, investment products, and so on. In many cases, these monoline lenders offer very good deals, good interest rates, good terms. But the thing is that normally they are only online and they do not have a physical branch where you can just step into and talk to someone. And these, for example, are lenders like MCAP, First National, and True North Mortgage. And the third option that you have to get a mortgage, which we have taken, is to work with a mortgage broker. And that's the topic of today's video. And here are some of, I would say, the benefits of working with a mortgage broker. A mortgage broker is someone that you can discuss your different options with. They usually work with a number of banks, but also monoline lenders. They have a good working relationship with them, and they will be able to analyze your needs for a mortgage and hook you up with the best deal. Because of their very extensive knowledge and experience, they can kind of compare the different mortgage offers by the different lenders and offer you the best deal with the best rates and best terms possible. The great thing is that these mortgage brokers are really positioned to service you. They really work for you and in your best interest. If you have questions about the application and the documentation and everything, they are there to help you with that. Another advantage is also that you have direct access to your mortgage broker. When you have questions, they are there for you to talk to you on the phone or via email. Whereas if you worked with a monoline lender, usually you would need to call up their call center and you need to queue. You just don't get the same level of service as you would with a mortgage broker. But the best thing of all, guys, and why I really love working with a mortgage broker is that you do not need to pay them a cent because they will get paid by the mortgage company, the mortgage lender, not by you. So working with a mortgage broker will not incur any additional expenses on your side. All that you will get is the best mortgage possible. Where do you find a great mortgage broker? There are so many, right? Nowadays, it's super easy to just find a mortgage broker online. Just go to Google, type in mortgage broker, and you can just pick from the list that Google gives you. But here's actually the much better and much safer alternative, which is to get introduced to a mortgage broker through a referral. And this is what we did in our case. My husband actually got a mortgage broker referred by his colleague. His colleague already worked with this one mortgage broker for years, and she had an awesome experience with this mortgage broker. They were very helpful and so on. So we were very confident that this would be the right decision. So in case you're looking for a mortgage broker, the first thing I would recommend to you is to just ask around in your network, ask your family, your friends, your colleagues at work, ask them if they know a really good mortgage broker that they have worked with, and ask them to introduce the mortgage broker to you. By the way, guys, if you found this video useful so far, then please do let me know by hitting the like button. And while you're at it, also let me know in the comments below what else you want to know about this whole house hunting process, and I'll try to incorporate that in one of my next videos. Thank you. So now let me just run you through what happened next. So this colleague of my husband connected us to her mortgage broker, and the very next day we got an email from this mortgage broker. She introduced herself, asked us to schedule an appointment per phone with her, and also sent us a questionnaire to fill out. So right that afternoon, we scheduled an appointment with her for the next day. So this questionnaire just asked us for some general details. For example, who the main applicant would be, whether there would be a co-applicant or not. So in our case, both of us applied for the mortgage. In the questionnaire, we also had to fill out whether or not we already intended to put an offer on a specific property. And by the way, at that time, we were actually in the process of putting an offer on this one here in Hyde Park. This is a video that I made a while ago. It's a 1-bedroom condo, so check that out if you want to know more about that. So the next day, we talked to the mortgage broker for about half an hour on the phone, and it was quite eye-opening. After a bit of chit-chat, she confirmed with us some general details, most importantly, our details of employment. She also quickly went through our assets and investments. She asked us how much investments we had, how much we had in our RSP, in our TFSA, in our savings, and also our checking account, because all of these details that we submit will influence the outcome of our mortgage application. And also very important, she asked us if we already had the down payment in place in cash, which good thing we already had at that time. Only, as I told you before, some of that was overseas in our own accounts, which we still had to transfer over to Canada. But that was done pretty quickly in a matter of days. One thing that she went to in quite a lot of detail was our work history. She wanted to know our work history in the last 3 days, including things like company, position, and salary. So one of the things that we figured out that was really important for the mortgage lender was that there was continuity in the employment history. So for example, my husband, who is an accountant in the film industry, he changed jobs several times in the past few years, but that was not an issue at all, because every time that he changed jobs, he got a higher salary and he remained in the same position and in the same industry. And it also helps, although this is not a must, if the company that you are working for is a rather big and well-known company. Because in the end, what the mortgage lender wants to know is whether or not you are working at a company that is stable and that will provide you a stable income for years to come to pay off the mortgage, right? So at that time, the listing price of the condo that we wanted to put an offer on was $459,000. But we also knew that it would likely go for $470,000 and more. And perhaps that might not even work out, and we might put an offer on another condo. And that is why the mortgage broker suggested to us to apply for a mortgage amount of $500,000. So we had the freedom to go up to that amount of $500,000. And in relation to the first-time homebuyer program, there was also one very important thing that she wanted to confirm with us. In case you guys don't know yet, in Canada, there is such a thing called the first-time homebuyer program, where people who are first-time homebuyers, and there's a specific definition for that, and they are allowed to make use of their RRSP funds. RRSP stands for Registered Retirement Savings Plan. So if over the years you put money into that plan, when it comes time that you want to buy a house, you're allowed to take money out of that plan. Actually, you're borrowing from yourself up to a maximum amount to finance the down payment of your home. And for this, there is one very major condition, which is that the funds that you withdraw for that purpose has to already have been in your RSP account for at least 90 days. Good thing was that the majority of the funds that we needed for the down payment have already been in our RSPs for more than 90 days. So if we were to purchase a house that costs $500,000 and 5% down payment would be $25,000, that means that the $25,000 has to have already been in the RSP account for at least 90 days. But there are some more details to that, so I'll probably make another video about this in the future if you guys are interested, so please let me know in the comments below. So our mortgage broker did some calculations and told us that yes, at a purchase price at, for example, $500,000, our down payment would be $25,000, plus there would be closing costs of about $9,000. While my husband has been employed all of these years, I was self-employed. And because the nature of my income has been fluctuating, it seemed that the mortgage lender would require a slightly higher down payment. So instead of 5%, for example, they might need 6% or 7% for the down payment, which we luckily also had, so that was also no issue. So our mortgage broker did some calculation, and by the way, this was around 3 to 4 weeks ago, and she arrived at the conclusion that at that point in time, we might have two options. One, to get a mortgage from a bigger bank with a rate of 5.09%, which was rather high, or to go with a credit union, which offered a mortgage rate of 4.79%, which was slightly better, but still not ideal. But at that time, interest rates were slightly higher than they are right now. So if right now you go and buy a home and get yourself a pre-approved mortgage, then you'll likely get a much better rate than this. But keep in mind, guys, what we got was just a pre-approval so far. And a pre-approval is just an estimation of what the maximum amount we might be able to borrow is. We would still need to go through the actual approval process to get 100% certainty. So we could say that perhaps we were 99% approved, but there was still a 1% probability that we would not get approved. And because of that, our mortgage broker strongly advised us that if we were to put an offer on that unit that I told you about earlier, we should put a financing condition in our offer. So that financing condition protects us in the case that our mortgage application does not go through. We have the right to back out of the contract and even get our down payment back. If we do not have that financing condition in place and it turns out we did not get approved for the mortgage, then we could potentially lose our down payment. So this was what I would call stage 1 of working with a mortgage broker. But in the end, we luckily ended up not using that rate of 5.09% because in case you already watched that video where we put an offer on that unit in High Park, that offer got rejected. And the great thing about that was that we had a new chance to get a new pre-approved mortgage with a better rate. But I'll share more with you about that in one of my next videos. But overall, I would say that even though we were not successful yet in buying a house here in Toronto, working with a mortgage broker was a very good experience. It kind of alleviated all of our concerns and worries because there was this mortgage broker who was our partner who really explained to us the whole process end to end, went through the requirements and all the documents, and with that we kind of had more peace of mind compared to if we were just to go online and apply for a mortgage there. So guys, I hope this video was useful to you. In case you haven't watched my other videos in the series of hunting for a house in the GTA for under $500,000 yet, then make sure that you check out this playlist here. As usual, thank you so much for watching, guys. I wish you an awesome day. Spring is coming, so enjoy the spring, and I'll see you in the next video.